going on? Thanks for joining.
Thanks for having me. Super excited.
Yes, sir. We have been loving following a16z crypto and all the great stuff that you guys have been putting out. I sent you guys this in our email thread, but we essentially took the a16z stack and we added like all of these different separate interviews that we've had in the last year or so to first off, just thanks for all the content that you guys are putting out around stablecoins, and excited to dive into the latest stack kind of framework and how you're thinking about this. But as we kick off, maybe we just start with your intro, how you found your way into the firm, and start there.
Well, for sure. Well, I have to be honest. I've mutual admiration. I've been a huge fan of the show for a while. I think I've been watching it since inception. Love what you guys are doing. But yeah, to give a quick background on myself, so I've been on the a16z crypto team as an investment partner for the last 3 months now. My main focus area is investing in companies sort of at the intersection of fintech and crypto. I spent the last few years at Visa, where I worked on the crypto team, helping with the stablecoin strategy, and so have built a bit of an insight in terms of seeing how a big company like Visa is thinking about the space, and but now getting more of the perspective of how our startups going to come and disrupt as well.
What's been the transition like from Visa to a16z? I'd imagine maybe a similar conversation, but very different types of roles. What's that been like?
It's been an amazing experience so far. I think when you're thinking about the strategy again of like a really big company, I think you look at it from a different lens. But I also think it's helpful when you're talking to companies who maybe want to work with a Visa or want to work with one of these bigger companies, understanding what they look for and kind of the perspectives from there is helpful. And I think also gaining a lot of empathy for what it's like to be a founder. I think it's much different again when you're within a big company, and in meeting with founders and being earlier in the process is something that I'm actively learning more about and trying to be helpful.
There's a lot of great content. I'm sure we'll pull this article soon where you're kind of laying you're laying, it's the lay of the land for the the stablecoin stack. Would you say that coming from Visa to a16z has kind of like broadened your horizon, and it's like peeling an onion, like you realize like, oh man, we have to keep on going like deeper and deeper and deeper? Or do you feel like you had a pretty good grasp on that?
Yeah, for sure. I mean, I think the biggest transition is, obviously when you're working at Visa and you're thinking about it from a strategy standpoint, everything is oriented around how can you grow Visa's network, and like what are the relevant products that we had as a company, and how does that overlay on this new stack. And I think being more general purpose, if you will, and thinking about it from more of a broader landscape, I think it's forced me to better understand how other companies and other businesses are going to operate.
So yeah, I'll pull up the map here in a second. I guess something that when we've talked with other folks who are working in venture, they're investment partners or at different VCs, something that at least I've seen is like when they enter a firm for the first time, they're kind of expected to bring a thesis or a sense of like conviction around what they believe about the world and what they're trying to bring into the firm. And I feel like your experience at Visa provides like a really interesting potential thesis there. I'm wondering what that might have looked like, because it sounds like just like a couple months in here. What was that? When you were going through the process of joining the firm, what were some of those core thesis conviction points you had, or reasons where was the alignment, I guess, between Noah's thesis and what a16z crypto is trying to do?
Yeah, for sure. I think if you've been terminally online, like many of us have been over the last few years, I think the narrative around stablecoins has really been, it's either going to completely disrupt how traditional financial institutions operate, or it won't work at all. And I think the better answer is it's probably some sort of combination of the two. And, I think a great example of this is, for a while, I think the commentary has been, well, stablecoins are going to completely replace a Visa or a MasterCard. It's going to be the way in which consumer payments work. And I think if you look at what has happened in the market over the last few years, stablecoins have really evolved as a better form of fintech, a better form of banking as a service. But cards have been the primary mechanism of which stablecoins have been used for making payments. And so I think it's less of, will stablecoins completely replace all of the companies that have been around for a while in financial services, and rather be more of, how can stablecoins make those companies better, and what are the startups and what are the companies that are coming into the space that are going to help them make that transition. And so I think it will be a combination of, legacy, incumbents integrating or acquiring or this new technology, but also a whole new class of startups that are building net new products that they're able to because of some of the properties of what stablecoins provide.
Yeah,
let's
so let's
transition.
dive into this new stack. Go ahead, Zach.
I was gonna say, so yeah, let's kind of lay the foundation for this new stack. I mean, was this a like a weekend inspiration project that you're like, hey, I kind of just want to break this down, kind of help us, like, give us the lay of the land. When did this start? And then maybe we'll kind of go through each of these sections a little bit one by one and really call out some of these
Nothing
key
gets the
layers of
people
stack
going.
that-
Just gonna say, nothing gets the people going like a market map.
Yeah,
Man,
well-
we love market maps.
Well, first of all, I mean, it was definitely a team-wide effort. Very grateful to get to work with a lot of amazing people who not only understand the space really well, but love putting together content. And so, I think this is something that we as a firm try to have a really strong grasp on where the market is. What are the relevant categories, and then ultimately, what companies are ultimately operating in there. And I think it's helpful from an investing perspective because it allows you to frame kind of like what the space looks like. But yeah, it was definitely a very large team-wide effort.
And so walk us through this, because I'm going through the article right now. We started blockchains in the three categories. I'd say it feels like institutional networks, Canton, they definitely have jumped out recently. We've got to speak with Yuval and Eric a few times. Payment specific blockchains seem to be all the yeah. How much of that is taking up mind space right now for you when you're looking about this? Are you even seeing, are we at a stage right now where we should be looking to new chains, new blockchains? Is it more, hey, look, Tempo's here, Plasma's here, Arc's here, Canton's here. Focus on building in those ecosystems and let's move on.
Yeah, no, that's a great question. I mean, I think first of all, I think there's a widespread recognition that in order to get mainstream adoption for blockchains, privacy is going to be a critical part of crossing the chasm. And I think as we look back at the historical arc or trend of where blockchains have come from, I think there have really been three core barriers to mainstream adoption. The first I think is having highly performant blockchains. I remember back in 2022 when NFTs were taking off, buying an NFT, you're paying like $20 or $30 of gas. I think we've largely solved that problem through the advent of a lot of technological progress with blockchains, and where block space is much less of a problem today. I think the second biggest barrier has been regulatory clarity. And, with things like the Genius Act and, things like Clarity Act, we're making significant progress there. And then I think the last one, which has taken the longest to solve, but we're starting to just see solutions there, is privacy. I remember at Visa, one of the big concerns was, we had been doing stablecoin settlement where issuers were settling with us in stablecoins and we were settling with acquirers. And I think, throughout the investor relations team, there's this widespread anxiety of someone creates a Dune dashboard over a weekend and now all of a sudden this data is public. I think that problem magnifies and gets much bigger when you're dealing with things like trading and, you don't want to get front run and things like that. So I think what we're seeing is it's less that one blockchain is better than another. I think certain use cases tend to work better on certain chains just because of the features that they're prioritizing. And so whether it's payment specific use cases, which we've seen with Tempo, or having privacy as a core feature with Canton, I think what we're seeing is that institutions are gravitating towards certain chains based on what they're trying to do.
I wanted to double click, Zach, just given the chat we had earlier with Nick from Agora on this piece. The charter race is an interesting way to frame this. Like, say a bit more on this. Like, what are you seeing, Noah, from the issuers themselves and the type of race to get licensed? What are you seeing there?
Yeah, well, I mean, I think part of it is a byproduct of the Genius Act. Now with sort of the federal charter as kind of the core way to become a stablecoin issuer, I think we're seeing a race for people trying to build out that capability. But then I also think, we've seen hints at the possibility that in the future, obtaining an OCC National Trust Charter could give you direct access to the payment rails and get closer to the metal. Seems to be an important priority for a lot of them. And, I think it's just a natural extension of, as regulatory clarity increases, people want to get regulated, people want to have the capability to do more. And generally speaking, I think getting closer to the metal gives you more capabilities than without it.
Drew, any thoughts on this charter? I know this is something that you've been focusing a lot on, especially with this conversation with Nick earlier.
I think for me, maybe I'm just flawed and I think of the world in this way, but I'm always trying to find, like, where is the value going to accrue? I think I naturally kind of think as an investor might about this, where, yeah, you're really starting to figure out, like, okay, as this industry matures, as stablecoins find their wedge into all these different use cases, like, where actually are people willing and like very clearly wanting to pay real money to certain parts of the stack, and where are those business moats created and where are those economics going to flow? Yeah, I think the stablecoin issuer specific lens of like an AUSD and Agora is really interesting. So I'm always asking that question, maybe similar to Noah, how you might be. But yeah, I think the issuer specific one with bundling a lot of this together is really interesting to me right now.
Yeah.
When you're walking through this market map, like, are there any big gaps that stand out to you right now? I mean, I even think about this from the lens of like a stablecoin issuer, and on the hood, you know, on the surface, everybody seems like they're the same, and then under the hood, you see all these differences in the charters and the licensing, and you know, you may even look at like a bridge and an M0 and think, okay, well, I go to them because I want a stablecoin, but the way that that's done is very different, and people can actually issue with bridge through M0, and you start to see all these nuances that really have a large impact too, especially the application and embedded protocol layer. I mean, like I said, so I guess, yeah, my first question is, what are those gaps? What do you see right now? And then maybe if we can bring it into this application embedded protocol layer, like anything that jumps out to you in that realm as well.
Yeah, and you know, I wouldn't characterize it as much as a gap, as much as I would say I think there's opportunity for more development and adoption. You know, I think the two that we mentioned in the writing, one was, you know, liquidity providers that can provide, you know, FX and deep liquidity for stable coins to fiat. You know, I think what we've seen in the last few years is, especially in the stablecoin orchestration business, is that stablecoins are an amazing solution for cross-border money movement because it significantly collapses the amount of time that it takes to get money from point A to point B, and it reduces your requirement to do things like pre-funding. I think the challenge, and Zach Abrams from Bridge has mentioned this a few times, where what's paradoxical about, say, maybe how an exchange works versus how traditional FX works is that the bigger the transaction that you do, the worse the rates often are. And so I think for stablecoin money movement to really explode, which it's, you know, if you look at the data, it's grown a lot in the B2B use case, but I think for it to really become mainstream, what we need to see is more liquidity providers that can provide really deep liquidity between stablecoins and fiat. And I think part of that is, you know, you have new players like XFX and OpenFX who are sort of connecting different banking relationships and are bringing the liquidity themselves. But I also think it's going to come down to, you know, will banks, FX banks specifically, eventually get to the point where they can support settlement in the form of, you know, for doing FX trades. And so I think once that happens, stablecoins will become increasingly price competitive for how you do cross-border money movement. So I think that's one area. And then I think the other area we talk about is specifically bank connectivity. You know, we've seen a tremendous amount of adoption and development in terms of all of these various products in the infrastructure stack for how does a fintech, a corporate, a non-bank integrate this technology. But, you know, as many people probably know, banks are built on legacy, you know, core ledgers that just, you can't just integrate an API. It just doesn't work like that. And so I think companies that are working to solve that gap by actually becoming that middleware will be really important for how banks, you know, adopt this technology in the future.
On the bank connectivity bucket here, we have Stablecore, Omnia, Stride, Tesser. We've interviewed or covered about half of these so far. I'll pop this back up. Any thoughts specifically on any of these names or like unique call outs to what made you, you know, maybe specifically want to highlight them versus others on this?
Yeah, for sure. I mean, you know, I think it's been a bit since I've connected with all of them. However, I would say, you know, I think they've done a really good job of really engaging with banks, better understanding what their needs are, what they're interested in doing, and in understanding their pain points. You know, I think they're all doing great stuff, but I think there's still a ways to go. And I think it's probably less on their end and more that, you know, banks are just inherently going to move slower. You know, they need more clarity from a regulatory standpoint. And I also think, you know, a lot of these are big changes. And so they're more deliberate and thoughtful in terms of how they adopt this technology. So, you know, I think they're all playing and serving an important role in the space. I think it's just more of a question of, you know, how long will it take for them to really gain adoption?
Is there any like specific category that you see as an investor or as a firm that you feel like maybe either or is like over indexed with founders or startups or demand of people going to solve problems, or on the opposite side, under indexed where there isn't enough, in your view, companies and founders and people trying to solve problems? Like, do you see any clear signals around, like the bank connectivity layer, for example? Like maybe, for example, that could be one that you think there should be more builders in. Any things come to mind there across these different categories?
Yeah, it's a great question. I mean, I think, what's been great is there's been such a robust and vibrant ecosystem of builders in the last few years. And, this market map alone, like a lot of these companies have really only been operational for a few years now. And so I think that's a testament to how exciting the space is. I think in terms of like areas that are exciting, bank connectivity is one of them. As I mentioned, how do we build deeper liquidity between stablecoins and fiat? I think maybe one area that would be exciting to see would also be, how do you get banks to start getting involved in things like DeFi? I think that there's a lot of opportunity for, how does loan origination happen? How does some of the back end things that they need to do for their core business, finding ways in which they can do that in a more on-chain way. So I think that's an exciting opportunity. I think in general, seeing new fintechs that are building on-chain native is really interesting. We've seen a lot of this sort of stablecoin neobanks that have come into the play, and building global products on day one, attaching other product primitives like cards, in payments and in DeFi as a way to create a more robust, full financial product where you look at it and you say, oh, this is more or less what I can get with a traditional bank account, but is offered in this new sort of platform. I think that's been really exciting, but I wouldn't say there's anything where I'm like, oh, there needs to be a bunch more builders here. I think it's more just watching them develop and seeing how they gain adoption over time.
You mentioned credit. Zach, do you want to dive into this one?
Yeah, credit's a big one. That's been a hot topic. Hot topic recently. We had Chris on from Credit Coop. Anna was just talking about warehouse financing. Talk about the prime product with Helix. I think credit is a largely misunderstood word, at least in the consumer world. How do you look at credit, and what specifically, like, where's its place in this vision of finance coming on chain?
Yeah, I think there's two ways to look at it, or sort of two sides of the network where this is interesting. I think on the one hand, if you buy my argument that stablecoins are serving as this new banking as a service, and we're going to see several financial products that look and feel like a traditional financial account, but are denominated in stablecoins, that's going to be an entire new set of supply of people who have dollars that are now looking for productive ways to utilize it. And so I think that creates more efficient global capital formation. And then I think on the borrowing side, there are several markets, specifically in emerging markets, where getting access to credit is challenging. There's credit deficits in the market. It's hard to originate a cross-border loan, for example. And I think what DeFi is doing, and smart contracts are doing, is it's making it such that you can originate loans on chain in a much more efficient way. And when those loans get repaid, you can do things like, how do you have receivable-backed financing where when a repayment happens, it programmatically repays a lender? And I think that becomes really important when you think of how do you enable blending to be done in a way that's less regional specific and more global specific? And I think that's what this sort of technology can enable.
Go ahead, Zach.
No, go ahead.
I was going to shift to the headless merchant thesis because I'm looking at your Twitter or your X and seeing this now. But Zach, go ahead if we want to close the credit loop. But now my gears are turning with headless merchants.
I mean, we can go down that route. I guess I'm looking at this like sea of applications and embedded protocols and credit. And I think similar to Drew's earlier question where it's like, okay, who's going to eventually like own that? Like, is it going to be the stablecoin neobanks? Is it going to be the crypto trade to earns? Like, where's that value going to accrue, and where are people going to kind of go for credit? I even think about like what we're asking with Perenna, where, are you D2C or is this a B to B to C play? And I guess even larger, I start to think about, in the context of how do all these pieces start to come together? We're getting this clearer vision of what this world of on-chain finance goes. But I think, when the Bitcoin white paper was written, this wasn't the exact vision I think anybody really had for the state of finance. So I start to wonder, and I don't know if you have an opinion on this, of what's this going to look like in 5 years? What's it going to look like in 10 years? We see people popping up talking about like net new primitives. What do our financial applications look like, 10 years down the line, with all this new infrastructure, these new protocols, all sort of blending together into one, if not, a select few apps?
Yeah.
And maybe that's a segue into the headless merchant a little bit.
Yeah. Well, I mean, I guess to answer your question, unfortunately, I'm not clairvoyant. If I was, my job would be a lot easier. But I think in general, like, our belief is that blockchains largely represent a new coordination system, and we think protocols are a critical way in which that coordination happens. And so, I think that what we see is obviously value will accrue to several parts of the stack, but we think that areas where real network effects can occur on both sides is where a lot of the value will occur. And so, we've been really excited about companies like Morpho and, in the space who have, built what we believe to be really interesting opportunities in terms of how do you build a network effect business that leverages sort of global rails and in new construct for how do you coordinate between different parties with trust as a key area.
So bring us into this a little bit. So this was a article that you actually put out not super recently, but it's something that got a ton of traction. And I think it's a theme for us that we've been tracking in recent months around the role of agents and how agents will consume specific pieces of information and how commerce will be conducted in that type of paradigm. Bring us into where the thesis of this article is and just the role that you think agents play in consuming some of the stack. Like we have the market map that we're talking about, the paradigm that most people think of when they think of buying services or products from that stack. I think naturally people assume that will be human driven. How do you see agents actually purchasing things and engaging with this stack that we've talked about today?
Yeah, it's a great question. So, I guess just taking a step back, I think that, when people talk about agentic commerce, which is obviously one of the hottest topics right now, I think oftentimes people think of, I'm going to ChatGPT, I want to buy a pair of sneakers, and that's my payment's going to be done there. And while I do think that, we are going to see a significant platform shift in how commerce happens for traditional consumer to business or consumer to merchant types of payments, I think the bigger opportunity is this massive transition we're seeing in developer services. And so specifically, I think what tools like Claude Code and Codex from OpenAI is doing is it's drastically democratizing who can be a developer, to the point where historically it's been, the biggest bottleneck to building something has been whether you know how to code or whether you're a software engineer. And now literally anybody with a computer and, $20 a month and to buy a subscription can go and build, amazing things in a weekend. And I think as a result, if you imagine that basically everyone is now becoming a developer, well, then that's going to drastically increase the demand for developer services and developer tools. Unlike developers today, most people who are vibe coding don't have an opinion. They're not very opinionated about, what they're going to buy and what they, one service versus another. And so targeting them through a traditional enterprise sales cycle doesn't make a lot of sense. They don't want to get on the phone, with a sales team. They don't want to go through a billing department. They just want to get a task accomplished. And so I think what's going to happen is the buyer of these services are going to shift from humans to more agents. And so therefore those agents need a seamless way to identify these merchants and then pay for them. And so I think what will happen is you're going to have this whole new class of headless merchants that rather than targeting humans with a pretty, storefront interface and a whole team of people to sell to them, it's going to be things like really good documentation, seamless, really good and efficient APIs. And it's likely going to be done on a per transaction basis, mostly because of the fact that most of the things people are building tend to be more ephemeral, where maybe you don't need a subscription if you're only using this one or two times. You just need something to work. And so I think it's going to open up this whole new opportunity, this whole new gate of merchants. And, we've seen new protocols get established like X402 and MPP. And I think that will ultimately be, one of the primary rails in which these headless merchants are accessed.
I'd say I'm not even a headless merchant, but when we come across teams that have these docs where you can, easily copy a page to, as a markdown file or even just like connect as a quick MCP. The time to just research and to prep some of these docs. I think I did a few for Drew when he was getting prepared for Stable Minded. And it's like, even that alone is such a game changer. But also it's just, I think about 3-4 years ago, again, things that we're not even thinking of that now we need because AI has been so, has just transformed the way we run our business. When we think about, the rise of headless merchants, I don't know, have you seen it in San Francisco? This is where my head goes. Have you seen the store that's ran completely by AI?
No,
Either of you? No? Oh man.
What kind of a store is it?
It's a storefront. They said, hey, I forget what the team was. They said, hey, we're going to use our model. You have to go out, like you have permissions to go open your storefront. You can choose which products you're going to bring into the store. And so it was going out and placing, orders at all these merchants. And of course, there's humans into in the loop to approve certain things, but it even conducted interviews and was screening applicants. It was, yeah, and they're like, hey, it was this distinction of, we don't want the world to go this route, even though it may be going down that route, and we want to showcase what this technology does. And so I think that if we are in this world where AI are these headless merchants, what do they need? And obviously, where does the stablecoin stack fit into what they need and how they may be running businesses? And obviously X402 and MPP are huge parts of that. And then I even think of, from an entrepreneurial perspective, like what businesses should people be going out and starting for these headless merchants?
Yeah, I mean, I think for the stablecoin point, and I wrote another article that kind of talked about, there's been a lot of conversation of stablecoins versus cards and like where do stablecoins play a role. And I think, my core argument has been the biggest challenge that I think is going to happen is when you have a merchant that literally has been spun up in a weekend, it's a team of 2 people and they want to just go and sell services. Getting card acceptance can be pretty challenging. And the reason why is because at the end of the day, what an acquirer is doing when they underwrite a new merchant is they're effectively saying, if this merchant doesn't provide their service, like they need to be on the hook for it. And so it's really hard to underwrite a merchant that is ephemeral and has just gotten, created. And, I think what stablecoins represent in this world is a form of digital cash, or very similar to, the street vendor who's selling hot dogs on the corner, maybe doesn't have card acceptance because, they're small and it's hard for them to get underwritten. And they, go to things like cash or more cash-like equivalents. I think stablecoins ultimately end up being a similar solution where you can just set up your storefront and get paid instantly. I do think over time cards will be adopted into this ecosystem and will be one of the primary payment methods. But even in that world, I think there's this whole rabbit hole of, kind of like what does the AI mullet look like, where you could have something like cards on the front where people put a card on file and their command line interface, but then ultimately the merchants get settled in stablecoins instantly. And, I think things like chargebacks and fraud are less of a problem in this type of commerce experience, because if I'm making a 3 or 4 cent payment and they don't provide me the service, then I'm willing to live with losing that. Whereas, if I'm buying something for a couple $100 or $1,000, obviously I really care about getting what I'm paying for. So, I do think stablecoins will serve similar to what we're seeing in cross-border money movement and just payments in general, as just a better store of value and a better form of settlement. And so I think in the early innings, stablecoins will be the primary method of which these services are paid for. And then over time, I think cards will find a way to play it, because it will, it'll benefit from the fact that most people have cards.
AI mullet. That's a new one.
Last question for me, because I know we're running a little bit over here, but just you've mentioned MPP a couple times. And when you said the idea of like developers and vibe coders and people who are building with agents, they may not care about some of these things. They may not care what card API they use or what stablecoin they use, or they really just want the utility of these things to work. And when we were talking about machine payments protocol, MPP, with Tempo and all that stuff, I started to think about the strategy there a little bit of like what they've done and how they've approached acquisition and being in-house with Stripe and just the relationship there, in that idea of like there almost will be kind of default options, I'd imagine, for some of this. Is that how you see that playing out for Tempo, or specifically like that ecosystem or other ecosystems where they will have kind of default cards or default wallets or default other things that are maybe preferential or owned by the strategic parties at those types of companies? I think Stripe is kind of leading the way in that model. Is that what you're seeing happen, or am I off with that?
Yeah, I mean, I think it's still kind of to be determined. I got to also say, I think the whole X402 team has done an amazing job. Eric and Kevin are amazing, and I think they're really pioneering the space, both in terms of sort of sharing the vision and also getting a whole new class of traditional merchants to come and go into this new universe. But yeah, I think it's like the space is very early. And so there's still a lot of open questions of how is this going to play out. But I do think there's sort of a race to, who can be the default wallet, for example, for developers. I think when you're the default wallet, you get the advantages in that you can own more of the discovery layer. You can help sort of orchestrate traffic in a way that's beneficial to you. I think pricing is also somewhat inelastic in this world, because again, if you're charging in microtransactions, it's hard for the average human to say, is this overpriced or underpriced, when it's on an API call basis. If you go to a restaurant and you buy, a plate of pasta, and it's very expensive, you have a sense of that being expensive. I think it's harder to look at something that's, accessing a very niche data service, and, is 4 cents a lot, is 3 cents a lot, it's hard to tell. And so I think if you're, whoever's closest to the merchant, whoever's closest to the developer is going to have a little more control than other parts of the stack. But again, I've been very impressed with both, the Tempo, the team, and, the people working on MPP. And I think the Expert 2 team has been great as well. And, we'll see what happens.
All right. I got one last question. Drew, maybe this is a question we need to start asking people. It's a little bit more on the personal side. I find it, I'm in the US. I find it really hard to pull these habits, and especially like for my wife, for example, to get her to use apps that may be more inherently stablecoin native. And you could bring up all the other conversations around, well, what happens if I die, seed phrases, keys, all of that. But maybe on a more personal note, like, how are stablecoins integrated into your finances? Are there any apps that, like, you just straight up, take a16z out of the picture, you're just like, I enjoy using them, this is a good financial application? Yeah, I mean, just where are you at personally?
Yeah, so I mean, I think, where we see a lot of product market fit for stablecoins is frankly not in the United States. If you really fundamentally bring down, where are stablecoins most useful, it's really 2 areas. One is crypto capital markets. How do I engage with DeFi? How do I engage with buying in crypto? And then I think the other major one is dollar access. And a lot of the stack that we showed, I would say, is more the latter than the former.
Right.
So for me personally, I engage with stablecoins, whether it's going to buy crypto assets within something like Coinbase. I use like their the Morpho integrations so that I can, borrow against Bitcoin so that I can, get yield. But, I would say I'm certainly not the core user for where I think stablecoins are going. But I think for me, on the crypto capital market side, the ability to buy a differentiated asset class, the ability to engage with things like trading, swapping, more of the degen side, I would say, is probably where I engage more. But, I certainly am not, the type of user where I think stablecoins are going to have the biggest set of adoption.
The Morpho Coinbase integration is a good call out. Also doing Bitcoin backed loan there. Beautiful user experience.
I think just a lot of these vaults too, they're attractive, yield sources. And even if, I've had my areas where I like meme coin trading and I like going down this rabbit hole to the new protocols, and I've kind of scaled back and landed in professional degen. Like, is that a term where it's like, it's these DeFi native protocols, but you don't feel like you're necessarily in like the riskiest thing that's going to disappear overnight, but it's definitely not, it's not surface level. You definitely have to, I think Project Zero probably fits kind of into that realm, or maybe things like Upshift, and where they're trying to swim upstream, but they're still in this DeFi bubble for sure.
Well, I'll give a lot of credit. It's funny. So I was at Visa probably a year into my role at Visa. And then, I don't know, I think you guys have met with Kai Sheffield, who's head of crypto at Visa, was my manager, great mentor, great person. But, he had this very big principle on the team. And I think it's part of why Visa has been so successful in crypto, is that basically every single person on the team needs to be crypto native. They need to use the products. They need to try these things. Like, you can't come up with a crypto strategy if you're not actually using the products. And so, I was literally a year in and I'd never really engaged in any of this. And so I spent, I think it was like a winter break, and I spent the entire time trying these different things and playing with it. And like, it was very eye-opening to like, once you use it, you have a much better sense of how this stuff works. And so, I do like, I will say, I think it's very important for people that are building in the space to actually be playing around with products, even if it's not directly relevant to you. And so, it's become ingrained in me through that experience that that's something important to do.
What were some of those aha moments early on in your crypto journey?
Protocol where you're like, okay, I kind of see this.
So,
now.
Yeah, that's a great question. So I think the biggest aha moment for me ever in this space was I had stable coins, or I had some crypto asset in a Phantom wallet, and I exported the keys and put it into a Soulflare wallet, and like my balance just showed up. And I had this crazy moment where I'm like, oh, that's how how private keys work, and that you can export it and put it in. And I'm like, obviously you can't take your keys from a Wells Fargo account and put it into Bank of America. And I think it opened up my eyes in terms of like how modular and composable these things are. And so that to me, like I was like, I now understand how self-custodial wallets work, and why this is interesting. And so I think that was like a really big aha moment for me.
Phantom, I think early on was like one of the best user experiences for doing that sort of thing. Like the mobility of keys was like a really great. I think done that as well with that app before. I remember having that same experience.
Yeah, it's hard because it's like in one hand, like, there's this narrative that's kind of being painted of like, oh man, but users don't want to manage their private keys and it's bad if they have to do that. And, what if they can't recover them? And all of that may be true. Well, it's also true that this is a type of freedom. And like you said, modularity, that there's also a large subset of people that I like the to be able to just say, hey, I don't really like this interface right now, but I don't want to just create a new wallet and have to trade these and, all the tax and tracking consequences. I mean, I'm going through that with my tax people right now. They're like, what wallet is this? And I was like, that was a year ago. I don't even know. I've moved on. So I could just say, hey, same wallet, same keys, just different interface now. And then when you kind of start to break that down into how does that affect when you have funds in a certain vault or in a certain lending protocol, just makes life easier to a degree.
So cool. Everyone's on a different journey. Thanks for welcoming us into yours and the just the awesome content that you personally and the firm just keep putting out there. So would love to have you back on, and excited to keep following you on X. And there's so much to learn here. Appreciate the vantage point of being able to kind of see the places where everyone fits. And yeah, appreciate your time. Are you going to be in Miami next week by chance?
Yes.
I'll be there.
Myself and then several other people on the team will be there. So obviously if anyone listening is building in the space or wants to chat, would love to engage with them.
Cool. I will be there. Maybe we can link up. Thanks for the time, man. This was fun.